Hi everybody, it's Janet Anderson from Janet Anderson Associates, a broker associate here at Keller Williams. And today I want to teach a class called Wealth Through Home Ownership. I'm really glad that you're here. If you like what you see, please follow us on YouTube, hit the subscribe button. I am very excited because we are going to be talking about wealth through home ownership, but in order to purchase, sometimes we need a great lender, and I've got one here. That is Janet Brown with FBC Mortgage, and she's going to talk to us a little bit later about some great loan programs should you decide that you think that this is a good time to buy. But today's class really is about wealth through home ownership, and I'm going to go over some really key information. And the only way to know if today's a good time to buy is really looking at history. And one of the things through home ownership is wealth, and that's what we're going to talk about today. So there are four things just off the top that right when you purchase that there are some wonderful benefits about purchasing. One is equity, and equity, right, is a way that you can build wealth just by sitting. Let's say, as an example, you purchase a home for $500,000, and in 5 years, now that home is worth $750,000. You've instantly increased. You have $250,000 extra on top of the money that you've already put into your home. Janet's shaking her head yes, because she agrees, and that's why she's in the lending, because she has seen many of her clients build wealth through home ownership. The other thing is mortgage interest deduction. And back in the day, probably I'm dating myself, but back in the 80s, and you probably remember this, Janet, back in the 80s, you could deduct things like interest on a car or interest on your credit cards. So the interest that you put, you could write that off on your taxes. That's all gone. There's only one way to help bring down your income so that you're paying less taxes, and that's through mortgage interest deductions. And obviously I would tell you to talk to your tax advisor, but there are some potential huge savings by being able to write that off. And then the other thing is long-term economic advantages. And again, like I said, there are so many things. You know, we've got older parents today, and they could take their equity, they could do a reverse mortgage at that point, or they could use their money and fund a retirement option for them. Or you could use that to help, you could use equity to help your children through college. Or you could just ride the benefit of what you've done and accomplished by paying off your home and live there. Guess what? Rent free. Other than some small taxes and insurance, no one's going to be raising your rent. And the fun part is, and this was one of my favorites when I purchased my first home back in 1993, which I'll tell you that story, is that I got to paint my house any way I wanted. I got to get a dog, and nobody was going to tell me what type of dog, and I didn't have to worry about my house payment going up. Oh, and I could turn on my music much louder, which was really neat.
Definitely pride of ownership.
Pride of ownership. There is nothing like that. Okay, so I wanted to talk about appreciation, and there is a great, and you could actually take a picture of it. There's this thing called a rent versus buy calculator, and you can really see the benefits of how many years it'll take before you actually reap the rewards of why you would want to buy versus rent. But please take in consideration that that is just a natural average, and a lot of times it actually pays off greater than you would even expect. So the typical is between 3.5% to 8.5% on an annual appreciation in real estate. That's huge. Huge. And just in the last few years, in 2020, we even seen, I think, 13%. It was incredible.
Yes.
But so even if you look at trends, and there are times that you'll see things depreciate, but if we look at the long term, you're gonna see that you're building wealth. It's, you know, the long-term goal or the long-term outcome is amazing. And I don't know of any, and I don't know any millionaire or billionaire that has not owned some type of real estate, right? Would you agree with that?
I definitely agree.
Yep. This is a funny slide. So 32 on average, and I think that this is actually greater too, because sometimes people spend 40 to 50%, if not more, on just their housing expenses. Yes. And when you're renting, all that money is just going down the drain. It's crazy. So we don't want that. Here are some U.S. housing price indexes. And over here, you're gonna see kind of a flat line. Back in the 20s and the 30s, number one, I don't think it was really tracked. And number two, people bought a home for necessity. It wasn't really thought of at that time as an asset like it is today. Mm-hmm. But as you can see, especially when we started tracking, and this is like during the baby boomers, right around after World War II, when more commercialism came out and people were buying homes, and then homes got larger and larger in the U.S. But, as the necessity grew, so did supply and demand. And there is a huge demand in housing. And, there is money to be made with rentals and things like that. So as you can see, if you look from the time that we were tracking, we continued to go up. And the only dip that we really did was right in here, and that was during that 2007, 2008 bubble. Now I want to talk to you about that bubble real quick, because a lot of people think, well, that can happen again. That could happen. I mean, nobody can predict the future entirely, but there was no controls back then, right? There was no, what is the word that I'm
stated income loan.
Yes, you could just have a pulse and you were able to get a loan, and that's really what caused the housing bubble.
Yes,
Negative
loans.
Negative amortization loans and things like that. That's not happening today, and in fact, we have such low inventory that, and it's the lending criteria is so much tighter that I can't even foresee that.
Yes. Full documentation.
Yeah, so, and even if you look at when we dipped to the highest, right, or to the lowest, here, that was the lowest, we've surpassed that. So we've surpassed even 2008.
Yes.
So that gives you an example, gives you a great example of why real estate is the best asset out there. Is now a good time to buy? And again, this is great in regards to tracking what the interest rates are. So I want to talk to you about interest rates, and this is probably something that's good for you. Back in 1982, interest rates were above 16%. Now I know the Feds kept our interest rates low for too long. That's my personal opinion.
Yeah.
They kept them too low. That was historical low rates.
Yes.
Under 3%, 3%, 4%, even 5%. That's not. Yeah.
Just a temporary thing.
It's a temporary thing, right?
And right now, the rates.
Yeah, so rates are about, what would you say?
Around 6.5%.
Around 6.5%. My first house back in 1993, I paid 8.25%, and they said that was a good rate. So it's all relative, but really if you think about it, 6.5% or 18%, right? And we had 18%, and there are still talk that with inflation, interest rates are going to rise. So 6.5% really, in the grand scheme of things, is an incredible rate. We just have to retrain our minds, because we were thinking, well, wait, our neighbor got 3%. This slide's gonna be good, because this is gonna help you. With buying a house at our peak 6 months, 8 months ago, now prices have kind of leveled and came down to a little bit more of a normalcy, because they went up so high. You can't go up 30% or in 1 year's time. So now we've kind of leveled off. So this gives you an example for a house that you might have paid $400 or it listed at $450 and it sold for $500, and the interest rates maybe would have been 4.5%. Your payment would have been about $3,000 as an example. Now look at here, listing price at $450. Now there's a little bit, potentially depending on the house, there might be some more wiggle room. So we get it down to $425, same percentage down, but now we're at the 6.5% that I talked to you. But look at the payments, not much difference. So don't let rates scare you. Forget the rate. It's about your affordability. And that is where Janet's gonna come in. And I actually, maybe this is a good time. Well, actually, I'm going to keep going because then I want her to talk to you about where you can actually come in with no money down, and you heard that right. You don't have to pay closing costs potentially, no down payment. You're going to want to call Janet after she talks to you about this. Okay, mortgage rates. Again, we just kind of talked about it. 1977, 16.82. Can you imagine that? That's credit card rates.
Yes.
Oh, well, and let me go back to that slide because people will say, well, but houses were only blah, blah, blah. You know what your pay was? It's still relative to today's pay versus back then. I think when my father was making $15,000 a year.
Yes.
$15,000 a year. Who makes $15,000 unless they're working part-time or, you know what I mean, or very minimal wage? So it's a big, and he worked for Ford Motor Company. So there's a big difference. And yet, you know, yeah, their house might have been $200,000, but their interest rate was 16% and a $15,000 wage. It's all.
Yeah, exactly. People are making more money now.
People are making a lot more money
Yes, and that's the big thing.
now. Mm-hmm. So the loan options, and this is where I'm going to have Janet comes in. There's so many different programs, and through Janet Anderson Associates, we also have additional programs that we can talk to you about that too. So if you want more information, definitely we'll leave our contact information. But for loan options, we've got the first-time home buyer programs, FHA, VA, conventional, and maybe you want to touch on that a little bit more and just make sure you speak really loud so our
Yes.
listeners can hear us.
The first-time home buyer programs, and really the definition of a first-time home buyer is if you haven't owned a house, a property within 3 years. That is you'll be a first-time home buyer. And right now, CalHAFA, which is a down payment assistance, they do have a down payment program that's coming out a week from today, March 27th, and it's 20% down. It is a silent second, and it's great to qualifying for that because it makes buyers, more people be able to afford to buy a house because you do get 20% down.
That's
it is
amazing.
A down payment. That's huge.
Now let me ask you just a couple things because I don't think I asked you. For the down payment assistance, because it's a silent second, will they still have mortgage insurance or a small mortgage insurance?
No, there is no mortgage insurance.
No mortgage insurance. That is huge.
Huge.
And they don't have to pay on that second, so it's silent.
Yes, silent.
Unless they sell the house or refinance.
Or refinance.
So
and then that
basically,
loan has to
it's
be paid.
literally free money. Just hold on to that money unless you sell the property. And then what? I'm sure there's high interest on that, right?
No, it's regular. It's regular interest,
Like what? Like what?
Around 6.5.
Okay.
It's
What was that 1% thing that you were talking about?
No, the 1%. That is the interest. That is for the second.
So the silent second.
Yes.
So if I sell my house and I have to pay back the bank, I'm only paying 1% on that.
Yes. But this is going to be rolled out next week. And
Oh my gosh.
They're still fine tuning some.
Okay, you guys, this is historic.
So it is.
It's
huge.
historic. 20%. You're giving 20%.
Yes.
And
yes,
we could potentially ask the seller to pay closing costs.
Yes.
And no mortgage insurance.
Yes, and it is limited government funds. I mean, it is. I mean, I saw a video this morning. It was like 500 million.
Okay, so there's
so
500 million.
It's money that can run out.
So call
this
us.
Is only in California.
Call us now because this is going to go away.
Yeah.
Call us now. This is incredible.
Yeah.
Oh my
is.
gosh.
And
You heard it first.
And you have to, of course, there's some, guidelines, restrictions, and all of that. But you don't know until you apply.
Okay. Well, I'm gonna get some more information because I've got some clients that I think would fit that. So we definitely need to talk about that. That's great. So how would we get a hold of you, Janet?
Well, I have my phone number.
Oh, you want to tell the readers?
And
the readers, the viewers?
I've been with FBC Mortgage for, I've been lending for 9 years, and with FBC for over 3, and my phone number is 209-765-8471, and I would be happy to work with you to get you qualified.
That's awesome.
And even if you don't have perfect credit, I can help with that too. And it's just the bottom line is you have to pick up the phone.
You
Like,
just
pick
have-
up
yeah.
the phone and not be scared because you just don't know what you
And
qualify.
that was the other thing is if
You
your
know,
credit's bad, you
I can
teach
work
them
with it. I can help people
without without them having to pay credit repair.
Yes, exactly. And that's just a waste of money.
That's just a waste of money. Okay.
I can do that.
Okay, so all right, so we've got the information, but you might have some anxiety and fear, right? Whenever you, especially your first time. Oh my
Exactly.
gosh.
And I definitely
right.
walk through my clients every step of the way.
Yeah.
Any questions they ask, any concerns, that's what I'm here. Just explain to them everything. It's like, don't worry, this is what's happening, and I'm here. I mean, it's just exciting.
Yeah, absolutely. She is here as well as we are here too. I was once a first-time home buyer. You were once a first-time home buyer. We understand that anxiety and that fear, and really, it's educating yourself and just those feelings are part of the process, right? It's,
Yes.
But it's exciting.
It's
at the same
exciting.
Time. It's excighting.
You're a homeowner.
Yes.
And that is just
there's
makes
nothing better than to
And
hand a
it is.
homeowner the key for the first
And the
time.
bottom line is pride of ownership. I mean, that's just the bottom line.
And you're potentially leaving a legacy.
Yes.
You know?
Yes.
Okay, so investing in your future. And I think we've kind of pretty much covered that. If you have any questions, Janice Smith is one of my buyer's agents, obviously Janet Brown. So here are our phone numbers. And that completes our class. I want to thank you. I hope you got some information. If you'd like more information, give us a call. I look forward to hearing from you and have a blessed day.